You look at your bank account and feel a heavy weight in your chest. You are in your peak earner phase, working harder than ever, yet retirement feels like a storm looming on the horizon. The fear that you started too late keeps you awake at night. But being in your 90s or 50s does not mean your story is over. This is your second act, and every single dollar you save now can hit back harder if you know where to put it. For years, money seemed to slip right through your fingers. You paid bills, took care of family, and put your own future on the back burner. That feeling of regret can make you feel frozen, as if the game is already lost. But the past is just a lesson, not a life sentence. The real danger now is not starting late, but walking into the fight without a clear plan for your money. To win this second act, you must first face the taxman. Every single time you get paid, a huge chunk of your hard work disappears before you even touch it. That is because you sit in a specific tax bracket based on how much you earn right now. Demystifying tax efficiency starts by looking at this paycheck reality. You must decide whether to give the government its cut today or wait to pay them many years down the road. This brings us to the great battle between two major choices for your money. On one side stands tax-deferred investing, usually found in a traditional 401k through your job. On the other side stands tax-free investing, best known as a Roth IRA. Both tools are built to help you grow your wealth, but they fight for your future in completely different ways. Knowing how each one works is the secret weapon you need right now. Let us look closely at how a traditional 401k works. When you put money into this account, you use pre-tax dollars. That means every dollar you save drops your taxable income today. If you are in your peak earner phase, making good money, this immediate discount on your income tax gives you quick breathing room. It is like getting a discount on your training gear right before stepping into the ring. That instant tax break feels like a fast victory. You get to keep more cash in your pocket this year, which means you have more money left over to build your emergency fund or pay down heavy debts. When you see your current tax bill go down, the knot of worry in your stomach begins to loosen. You start to feel in command of your financial life for the very first time. However, tax-deferred growth comes with a clear trade-off that you cannot ignore. The taxman is not giving you a free gift. He is simply taking a rain check. Your money grows inside the account without taxes for years, but the moment you pull a single dollar out in retirement, the IRS will be standing there with its hand out. Every withdrawal gets taxed as regular income at whatever rate exists in the future. Now step over to the other side of the ring and meet the Roth IRA. With tax-free investing, you do not get an immediate tax break today. You pay your taxes up front on every dollar before it enters the account. It feels like a harder hit to your wallet right now, but it buys you absolute freedom down the line. You are paying tax on the seed so you can harvest the entire crop tax-free. Imagine sitting on your porch 20 years from today, fully retired and at peace. You reach into your Roth IRA to pay for a dream vacation or your monthly bills, and every penny you take out is completely yours. The IRS cannot touch a single cent of your gains. That compound interest grew for decades, and you do not owe anyone a dime. That is the pure power of tax-free shelter. Picture living without the shadow of uncertainty hanging over your head. When you rely solely on tax-deferred accounts, You are constantly guessing what the government will do with tax rates in 30 years. If tax rates go up, your retirement income goes down. But with tax-free dollars, future tax hikes cannot touch your lifestyle. You locked in your price, paid your bill, and claimed total control over your golden years. So how do you choose between these two powerful options right now? The answer comes down to one core question. Is your tax bracket higher today than it will be when you retire? If you are currently in your highest earning years, your tax rate right now might be 30% or more. Paying taxes at that high rate today could hurt your ability to save enough volume for your second act comeback. If you are at the peak of your career, taking the tax break today with a traditional 401k might be your smartest move. By shielding your income from high taxes now, you free up maximum dollars to invest into the market. That gives your compounding engine the heavy weight it needs to roll forward fast. You trade higher taxes later for massive cash flow power when you need to catch up quickly. On the flip side, if you think your income will be higher in retirement, or if you believe national tax rates will skyrocket, the Roth IRA becomes your best friend. Even as a late starter, locking in tax-free growth creates an indestructible armor around your wealth. You sacrifice a small tax break today to secure decades of clean, untaxed growth for the rest of your life. You do not actually have to pick just one side in this fight. Many smart investors use a strategy called tax diversification. By splitting your contributions between a traditional 401k and a Roth IRA, you build a double-barreled defense. You get some tax relief today while also stocking up on tax-free cash for tomorrow. You give yourself total options no matter what the tax laws do. Having options in retirement gives you an incredible sense of relief. When you need cash in the future, you can pull from your tax-deferred 401k up to the edge of a lower bracket, and then pull the rest from your Roth IRA tax-free. You become the master of your own tax bill. The anxiety that used to paralyze you turns into sharp, quiet confidence because you own the board. Think about what this clarity means for your daily life today. You stop checking market news with a pit in your stomach. You stop feeling like a victim of your past financial choices. Instead, you sit down with your monthly budget, set up automatic contributions, and watch your future take solid shape. You are building real stability for yourself and the people you love most. The biggest mistake late starters make is standing frozen on the sidelines because they cannot decide. They spend months worrying over tax brackets while their money sits in low-interest accounts, losing value to inflation every single day. Waiting for the perfect answer costs far more than choosing a good plan today. Doing nothing is the only choice that guarantees you lose the fight against time. Look at your current paycheck right now and check if your employer offers a match on your 401k. That company matches free money and an instant 100% return on your investment. Always grab that full match first before doing anything else. It is the easiest victory in personal finance, giving your retirement fuel a massive boost right out of the gate. Once you secure that employer match, you can direct your next investment dollars into a Roth IRA, or keep funding your 401k based on your tax needs. Every small adjustment you make to your payroll deductions adds another brick to your fortress. You do not need a complicated secret formula. You just need consistent action and a clear understanding of where your money goes. As the months turn into years, you will watch your balances climb higher and higher. The compounding interest that once felt like magic reserved for wealthy people is now working for you around the clock. You are no longer just surviving paycheck to paycheck. You are building an enduring second act that will support you for life. That shift in momentum changes everything about how you walk through the world. When you take charge of your tax strategy, you protect your hard-earned freedom from outside forces. Whether tax rates go up or down, whether the market swings wildly or stays calm, your combination of tax-deferred and tax-free accounts holds firm. You have removed the fear of the unknown by preparing for every outcome with steady, deliberate steps. Your late start is not a badge of shame, it is the origin story of your comeback. By mastering tax-deferred and tax-free investing today, you turn your peak earning years into a masterclass in wealth building. Step up to the plate, make your choice, and take control of your financial destiny right now. Your future self is counting on the moves you make today.